Hey, what's going on YouTube? Welcome to my channel where I help you learn different strategies to become financially free. Here we use a lot of stocks, options, dividends, crypto, and other investment strategies and ideas to make that passive income on a weekly basis and become financially free. In today's video, I'm going to reveal my long-term dividend portfolio, which I hold currently in M1 Finance. I'm going to show you what I hold and sort of the pros and cons of it. So if that is something you're interested in, hit the subscribe button below. Give this video a thumbs up so other people find this content. So just before we get into today's video, I just want to shout out all my new subscribers that have joined the channel. We're currently up to 84 subscribers. We're well on the way to our first 100, and I appreciate all the support. This channel's only been around a month, so we're definitely growing and things are heading in the right direction. Speaking of which, let's quickly look at my Robinhood portfolio, where we've done most of the video so far. We are recovering to where we are. The price of Apple has gapped up this morning to $121. So we finished last week in the 116 and gapped up this morning. So the way it's going, we have the iPhone event tomorrow, which I'm really excited about, that I will be able to finally get back to selling covered calls around my break-even price. We're already up today, so the higher this share price goes, the more premiums I'm going to make. So we'll probably come back on Wednesday. Hopefully the Apple event goes well and the share price continues to rise, and we'll sell a covered call for some decent premiums this week, it looks like. We also have this store put that's going to expire on Friday. I would close it out, but I got paid $8 in premium for this option. The current value is $1, but unfortunately to close out this to buy to close this option back is 5 cents. So that's a good portion of my profit on this $8 trade. So I'm just going to let this expire worthless. Obviously, I would like to own 100 shares of store capital at $25. So I will just see how that goes. Here's a quick look at the gap up on the Apple chart today. So you can see it went really well. And let's get into what we're going to talk about today, which is the M1 Finance. So here is my M1 Finance portfolio. I call it the passive money pie because obviously it generates dividends. This is a long-term dividend investment portfolio. Its sole purpose is to hold companies that produce income on a monthly or quarterly basis. And last month, actually, I broke $100 in dividends paid, which was a first for me. As you can see, I earned $144 last month in dividends, so that's fantastic. But yeah, let me show you like what I hold, and I'll give you a quick overview on this investment portfolio. So, like I say, I currently hold around 28,000 in this. We are still down for the year. We've been recovering and dollar cost averaging all the way up through, the situation of 2020. So I did start this portfolio late 2019, I guess, on the top of that bull run. So I did suffer quite a loss during the middle of March, but we've recovered. We've kept adding money. We've dollar cost averaged all the way down, and we're getting some good companies at some good prices right now. So by this time next year, like, we should be in great shape. So this is the way I have the pie configured. I hold various different sectors, and I have them weighted differently. So my major holding is real estate. I have started trimming back this portfolio in general. I did hold around 68 companies, and I've trimmed that down to around 35-ish right now. But this is, I'll give you a quick sort of overview of each of the sectors and what I hold. So my two major positions in real estate are Realty Inc. and Store Capital. I'm extremely bullish on Store Capital right now, so I'm buying as many shares as I can. That's why you can see I've weighted these so high. Welltower, LTC, and Cedar Fair, I don't want to put any money in right now. And with M1, the way it works is, depending on how you've weighted it and depending on your returns, M1 will assign money to sort of continually try and balance your account. So sometimes you got to play around with the numbers just to get the results you want. And right now, I don't want to sell these off at a loss. So I've just stopped putting money into them right now. And I'm continuing to dollar cost average Realty Inc. and Store Capital. The real estate pie is my major holding. I have $6,800 in it, and it has made me around $200 in dividends, which is awesome. The next category we have is Telecom. This is my second biggest holding. In here, I only have two companies, AT&T and Verizon. I'm trying to get to 100 shares of AT&T. I'm at around 99 right now, so just one more to go. Both these companies are great long-term. They're both great dividend payers. As you can see, the two of them have paid $114 between them. And, that's pretty awesome. So again, just trying to dollar cost average on these two companies and, build that long-term portfolio. The reason I'm trying to build a significant portion of my account out to 100 shares each is because I would like to get to a point with this where I can sell options. Obviously, you can't do that in M1 right now, but that is something I am thinking about for the long term. Next up is my tech pie. Here we have Intel, Cisco, Apple, and ADP. Intel and Cisco I'm probably the most bullish on right now. Obviously, I do hold some Apple in here, but it's not a lot. It's just like 2 shares, 2.4 shares. But my cost basis on these shares was $67. So I'm going to continue to hold them, even though I have 100 shares in Robinhood. I will probably add to these shares over time, and with that low starting cost basis, that will keep my average down over time. Intel, as I say, I feel like it's a great deal right now. It dropped about $10 a share during the announcement that its chips were delayed, so I feel like this is a great time to pick up a company that is going to definitely recover as soon as their new chips come out, and it pays a nice dividend too. Moving on to the next slide, I've got a couple of ETFs, SPHD and VYMI. SPHD I really like. It pays monthly dividends. I really enjoy having this monthly cash flow into this account because the way M1 rebalances your account, it keeps just adding the money that I get from SPHD and from Realty Inc., which is another monthly payer, to building up my other shares, which help the account snowball. So both of these are really good. I mean, the VYMI is good because it's an international dividend fund, so I get some international exposure. I may trim this one out and just keep the SPHD and try and get that to 100 shares. I'm at around 63 right now, so it'd be nice to sort of get that one up to 100 again. I feel like we've earned $83 in dividends, but unfortunately, during mid-March, we did take quite the hit on this sector of my passive money pie. So, I am down considerably on it. But again, I'm not worried. I'm just going to dollar cost average and eventually that one will recover too. Next up, we have utilities. Again, I keep 4 companies in here. They've been fantastic this whole time. I did get a couple of chances to dollar cost average when the price dropped. So I hold Duke, Southern, Next Energy, and Dominion Energy. As you can see, they're all up, and they've paid a nice dividend. They're up $200 in capital gains and $62 in dividends paid. So this slice of the pie has done very well for me. And they all pay a very nice dividend as well. So I do enjoy holding this sector. Finance is my next slice. Finance hasn't done great over the last couple of months. My major holding in here is JP Morgan. JP Morgan has been sort of trading between the $90 and $100 mark, and it is a great time to sort of dollar cost average. So I have been trying to build this up. Bank of America is another one I've started to build up as well. I want to get to 100 shares of Bank of America. It's a very affordable stock at around $25, so pretty easy to get to 100 shares there, and that, again, that's a nice dividend payer. Then we have Main Street Capital, T. Rowe, and Aflac. Aflac, I'm thinking of trimming out. I like the idea of just having like 4 companies, so I can weight them at 25% each, and dollar cost average them down. Aflac as an insurance company doesn't really do anything for me, so I'm thinking when this price recovers, I'll probably trim this one off. The next slice then is healthcare. Obviously, healthcare has done very well this year. I've done some dollar cost averaging. I have Johnson & Johnson, Pfizer, AbbVie, and Amgen. All great dividend payers. Obviously, Johnson & Johnson's grown its dividends for years. It's a very quality company. So in this sector, I'm going to try and build Johnson & Johnson out to 100 shares. Pfizer's a great buy right now, and it also pays a good dividend. AbbVie, I'm still waiting. Before I put too much more money in it, I'm waiting to find out what happens with the whole Humira thing and whether they can continue to maintain their share price after that has been sort of resolved and the generic drugs come out. And Amgen's pretty steady holding as well. So now I'm up $97 on this sector and $46 in dividends. So I'm very happy with the way the healthcare slice has been performing. Next is my Syn Stocks. This consists of tobacco and oil. All pay an amazing amount in dividends, but tobacco obviously has the health side effects, and oil, I guess, isn't something I'm super bullish on right now. So while I do like holding these shares because of the amount of dividends they pay, long term I'm probably going to trim them out of the portfolio, just because I'm not bullish on tobacco or oil these days. So over time I will remove these out to something more stable. But even though I'm down right now, obviously oil has suffered heavily this year. I still have earned $126 in dividends, and that money has been reinvested into other companies like Intel and Store Capital. So what I am earning from this slice is helping me out long term. And then the last slice of my pie right now is industrials. I hold Leggett & Platt, 3M, Union Pacific, and Waste Management. 4 solid companies. We're up $200 in market gains, and they've paid $25 in dividends. Not the biggest payers, but super steady and reliable income generators. So, that's just a quick sort of overview on my M1 portfolio. Like I say, it's around $28,000 right now, and broke its first $100 month. So that was $100 plus I earned, while I was asleep. And this is the goal of this channel, is to show you ways to make passive money that helps reinvest itself, and that way we get to compound our money and watch it grow. So I just wanted to sort of give you an overview of this account, because I've been mainly focusing on options trading on Robinhood, but I do have this portfolio, which was the reason I kind of started investing in the first place. Dividends, seeing that dividend money trickle in, like, to me, is really exciting. I like watching it grow. I remember the first month that I got paid dividends, I was paid 18 cents. And every month since then, it has grown. One of the great things you can do if you set up an M1 portfolio like this is you can set it to buy some companies that pay out every month. So even though most stocks pay quarterly, for example, Store Capital, Bank of America, and AT&T, they'll pay January, February, March every quarter. So you can set up a 3-stock portfolio pretty cheaply. I mean, that's going to cost you around like $8,500, but to hold 100 shares of each of those, but they will generate about sort of $18 to $100 a quarter, and that money you can reinvest and watch it grow really quick. So if you do want to invest in M1, I do have a referral link in the description below. If you use it, you get $10, I get $10, so it'll start off your portfolio. But yeah, that's it for today, guys. If you've got any questions on dividends or options trading, hit me up in the comments below. And hopefully you enjoyed and got some value out of this video. Hit the like button if you did, and until next time, have a good week.